Hi, today we will be seeing the overview of the financial institution, especially the role of Reserve Bank and their subsidiaries controlled by Reserve Bank of India. You are all aware that Reserve Bank of India is the apex bank. It functions as bankers to the nation, bankers bank, and also it plays various roles, and printing currencies also is part of RBI's role. Sole authority to issue the currency in the country, and it is owned by central government, and in turn it owns National Housing Bank, which is a subsidiary, and Exim Bank. Till recently, RBI had major shareholder in State Bank of India, and the largest commercial bank, and in the public sector banks, and also in Nabard. Today we will be seeing Reserve Bank of India, RBI, in that SIDBI, Small Industries Development Bank of India, then Nabard, National Bank for Agriculture and Rural Development, Export-Import Bank of India, that is Exim Bank, and NHB, National Housing Bank. So what exactly the role they played in development of various sectors in the nation's economy? Other apex banks, apart from Reserve Bank of India, there are 4 apex banks in India in their respective fields, which I have shared to you. The first is Exim Bank, the second is Nabard, and the third one is National Housing Bank, and the fourth one is SIDBI. Exim Bank is started in January 1982 in the field of financing the foreign trade in India. What are the major functions of Exim Bank? Financing of exports, joint venture in foreign countries. It finances the import of machinery and equipment on lease basis. And the last one, it contributes in the share capital of joint venture in a foreign country. These are the major functions of Exim Bank. The paid up capital of the bank is 500 crore. This is wholly owned by central government. Exim Bank operates in 3 broad categories. They provide loans to Indian companies to expand the exports, loans to foreign governments. This is for buyer's credit, which is given, and loans to commercial banks. This again for export bill rediscounting, and also refinance of export credit. So the banks would have given the lending. Exim Bank takes care of their exposure of exports. Second one is Nabard, National Bank for Agriculture and Rural Development. This is set up in the month of July 1982. Similar to Exim Bank, which also got started in 1982. Nabard was owned jointly by Government of India and Reserve Bank of India, and the capital is 1000 crore when it started. So Government of India has 27.5% and RBI has 72.5%. This is as of March 31, 2010. So this is the detail about Exim Bank and Nabard for us. Then comes National Housing Bank. This is started by Reserve Bank of India, a subsidiary of Reserve Bank of India. It started with 100 crore capital. What are the major functions for National Housing Bank? To provide and develop specialized housing finance institutions for mobilizing resources and extending credit for housing developments. And it extends refinance facilities to housing finance institutions. So how do they get money? What is the resource for them? Bank is empowered to raise resources through issue of bonds and debentures. It can also borrow from the central government. It can also borrow in foreign currency from banks and financial institutions in India and abroad. So this is the way this National Housing Bank makes the capital. The last part of this is SIDBI, Small Industries Development Bank of India. This has started its operations in April 1990. by an act of a parliament to promote finance and development of industries in the tiny and small scale sector. That is called SIDBI, Small Industries Development Bank of India. This started in 1990. National Housing Bank, for your information, is started in 1987. So after 3 years, SIDBI started. SIDBI was established as a wholly owned subsidiary of IDBI. It took over IDBI's financing activities related to small scale sector. So, what are the major functions? Refinancing of term loans granted by banks and state finance institutions, direct discounting of bills, then equity assistance by way of seed capital to entrepreneurs. This is also part of SIDBI's activity. Rediscounting of short-term trade bills. This is also done. So the paid-up capital is 450 crore, which was wholly owned by IDBI till 2000. After that, the other institutions came in with the capital, which is GIC, General Insurance Corporation, LIC, Life Insurance Corporations, and other institutions in 2012. The ratio is 62.5% of the share capital held by public sector banks, 21.9% by insurance companies, 5.3% by financial institutions, and 10.3% by others. This constitutes 100% of the paid-up capital of SIDBI. There are other commercial banks which I am not going to elaborate on now, but broadly I will tell you what are the commercial banks which are existing to give you an overview of all the financial institutions in India. Commercial banks is coming under only scheduled banks. The other one is non-scheduled banks. So what is non-scheduled bank? There are only 4 local area banks. So these are the only non-scheduled banks. Under scheduled banks, we have public sector banks, private sector banks, and regional rural banks. So under regional rural bank, there are 2 categories. One is under private sector bank, there are 2 categories. They are private sector banks, which is Indian banks, and private sector banks, which is foreign banks. Under Indian banks, we have old generation private sector banks and new generation private sector banks. Under the public sector bank, one is totally State Bank group, the other one is nationalized banks. And for your information, there is no nationalized bank because as a shareholder, the government of India doesn't own 100% shares as of last was Punjab and Sindh Bank. Even in that, public shares have come. So now it is only public sector banks available. So one is State Bank group, the other side is called public sector bank group. Then we have State Bank of India and their subsidiary companies. And then we have subsidiary banks of State Bank of India. And again, nationalized banks have, public sector banks have subsidiary companies. So this is the overview of the banking system in India. So I'll come again. Commercial banks, we have scheduled bank and non-scheduled bank. Under scheduled bank, public sector bank, private sector bank, regional rural bank. Under private sector banks, we have old generation private sector banks and new generation private sector banks. For example, ICICI, HDFC and Axis Bank will form under new generation. Karur Vysya Bank and Tamil Nadu Mercantile Bank will be under old private sector banks. Under public sector banks, we have State Bank Group and other public sector banks. Under State Bank Group, you have subsidiaries of that and State Bank of India groups, subsidiary companies. Same way, under public sector banks, we have other subsidiary companies. So I've given an overview of all the banking and financial system in India. We started with the Reserve Bank of India, Exim Bank, SIDBI, Nabard, and National Housing Bank. And then under commercial banks, scheduled banks and non-scheduled banks. Under non-scheduled banks, we have only local area banks, labs they call it. Under scheduled banks, we have public sector banks and private sector banks and regional rural banks. Under private sector, we have old generation and new generation. Under public sector, State Bank Group and other public sector banks. I hope I have clarified an overview of banking system in India, which is very interesting to go through. If at all you find interest, you can go through the various banking system and then how they function in India. Thank you very much for patiently watching. Bye.